Right, welcome to the blog for Thursday, the 6th of September. So this is day 64 of 65 days. So, right at the end of this 13-week challenge, or 3-month challenge, a compound effect challenge, making forward progress every day, applying my edge and method. Quite exciting. Really been sticking to the guns and concentrating on doing the little things day in, day out, and just really focusing on moving forward and helping or making the compound effect work in my favour. The compound effect is always in play, but if you deliberately focus on it and do some things to make it work for you, then it can do some fantastic things in any area of your life, especially in regards of finances and business. So looking forward to getting to the end. One more day after this, just doing a real good review and what's happened and what sort of gains I've got from it, and then moving on and doing some sort of new challenge or some sort of thing, just making sure always applying this compound effect. So I've got the trading plan here. So it's all about being very precise and very systematic. Today is a good example. Took a trade today that really wasn't that keen on it, but in the end, and I'll talk more about it when I bring up the charts. In the end, it was there. I mean, it was a very clear signal, had everything, all the boxes ticked basically. Just in my heart, I just knew it didn't have a good chance of working. But then again, I just felt really comfortable taking it because I thought, well, at the end of the day, you just got to stick to the edge. Who says it's not going to work? Like I know many times, I think areas will work and they don't, or areas that won't work and they do, vice versa. It's sort of at the end of the day, markets do whatever they want. It's being systematic and always approaching it the same way. And when the clear signal was there, uh, just got to take it. But even though in my heart I thought it's possibly going to be a loser. Just already dealt with that before it happened. I was more than happy, just because what it comes down to is just when there's a really strong management program in place, risk models in place. Just know, just keep on turning up and keep on taking the trades. I'm going to be right in the long run. At the end of the week or end of the month, or more so the end of the month is what matters, and definitely at the end of the year. So, but that I think that comes back to having a really strong systematic approach and risk models, sort of wrapping all that up together in a nice, neat package. In the past, going back, even just a year ago, it would have been a different situation. But really comfortable just with any sort of area that comes my way. And yeah, so moving on to the charts today, it was an interesting day. Just all one direction. It's just one of those days that happens, not once or twice a month, if that. And it's funny, these sort of days when it's just all one direction. It's they're worse than the days that were in a tight range. Some of those tight days we had in August, I find I get more chances or more opportunities on those sort of days. When it's like this, it's sort of, you see the market just moving, moving, moving. It's almost like you want to be a part of it, but because it's all one direction, it just throws up no real opportunities. Day trading, we really need multiple directions and change and movements and breaking significant points and things like that. A day like today just went all one direction for the morning, and then the afternoon is really, in hindsight, looking at it now, it's just consolidated and stuck within quite a tight range, which is very typical of a market when it makes a decent move like that. Just it'll go sideways afterwards just to consolidate that move. So as far as key levels, I mean, I'll just squash the charts up for a sec. The same old levels are still in there, but we've basically broken up above all the levels that are predetermined. So just looking for the end of the week, I suppose, and review and pick up some more levels that are up a bit higher. But it's because we're hitting new territory. Obviously, this is all new ground. So at this stage, that doesn't necessarily mean there's always going to be a key level here, and then there probably really isn't at this stage for myself. So once the market's up like this, it just really needs to come back within the range if I'm going to take any of those trades that are based on these key levels. Before getting into the actual trade, today, this is the 15-minute chart here. It's like I said, it's one of those days. It's quite rare, which is good, where it's just one directional move. But most of the time, these days are quite predictable, and you can usually see them coming. As to how strong they are, like certainly didn't know or realise it was going to be this powerful of a move. By any means, no one could really predict. I reckon that it was going to go up as many points as it did, but certainly at the start of the day, I believed that it was going to be a day where we were going to push high and get some momentum up. Certainly up to these sort of next level on the daily charts was around 14, 17 sort of region. But the reason today is predictable because, like I said, markets, you get multiple directional moves because there's always this battle between buyers and sellers. It's a real, if you understand cash flow and order flow and things like that, you can sort of see where the market's going, and then all of a sudden direction changes, and it's just, it's the way trading is. Then you get some of these days like this that are just one directional. They're quite rare, but when they're breaking a significant point in the market, it's a bit like, I see it a bit like my reversal trades or things like that. Same thing applies to the 1 minute chart. When we break a significant area, you imagine the market leaves a significant point in the market, it comes down and breaks it, normally gets a push through it, gets some momentum, because all of a sudden they're picking up on all these new stop orders, and it gets a push through. Other traders see it, they jump on board, and it gets a continuation, and it comes back to order flow, and that's just the way the markets move. On a larger scale, same thing. When the market breaks a significant point, so whether it's a significant little swing high or swing low on the daily chart, so for example, the daily charts, when they came back, like, here's a good point here, there's a point up here, it came back, tried to break it, didn't get there, came back a second time, and when it broke, no doubt this day would have been pretty much a one directional day, because all of a sudden it's breaking a significant point in the market. So whether you're looking on the daily charts or 1 minute charts, you see that real continuation through an area. Today, there's the 15-minute chart going, there it is. Today, it's like this channel, we'll talk about this channel, like we've been within it for a few weeks now, and especially in the last few days, really sticking tight to this channel, and said just yesterday, I can't remember if it was this blog or the other one, but once we get outside the channel, it doesn't matter whether it's on the upside or the downside, it's going to get some pressure, and once it breaks either side, it's likely just to keep on going, because once it's contained for so long, as soon as it gets outside of it, it's just a release of pressure, and away it goes. That's why pre-market, you see it go out, you can see a real push through there. It's come back, used it as support, and then away it's gone. So you can see all this starting to happen as the cash market's opening, and then away it went. So as far as today, I mean, there was two things I was looking at. Obviously, there's this trade right at the end of the day. Something I was really keen on that just didn't come. I just couldn't take it because I just didn't get a setup. Was that first directional break? As the market's coming up and breaking this previous pre-market high, which is down here, just looking for it just to come back a bit, leave a pivot, a bit of a turning point there, come back within the range for a bit, and then go at it again and see all the other marks breaking the upside and just get on board. Really interested in something like that happening, but it has to be near the pre-market range, so the top or the bottom of the pre-market. Otherwise, it's an area that could just really go anywhere. It becomes a lot more probable if you're taking the right spots, and for me, I find that's at either end of the pre-market range. So I need to be around this sort of point here. You can see it's happened up here. So if I bring up the 1 minute chart, it's happened all the way up here. Come back, look at it to the tick. It hasn't been able to get through. As soon as it gets through, and this is exactly what we're talking about on the longer term as to why today overall was an up day. But the same thing, look at it on the shorter term. It's breaking a significant point here, and then away it goes. It's just got that pressure, boom. But for me, this is, it's too far up. It's up around the tops of the overall of the dailies. And right here, I didn't know. No one probably really knew that was going to be a day. We were just going to keep on going. By now it's a little bit extended. It's outside of that area I'm looking for. I'm looking for it to happen down here, down around this point here. Pull back. So this exact sort of setup, but down at the end of this candle here, come back at this candle. So I predetermined that this is something I was looking for. The setup just didn't come, but I was there waiting for it if it did come. As far as the actual trade, only one setup for the day, and that was this directional move here. So this is what I mean. Knowing that we've had such a strong up day today, I just knew that the sellers were just going to be very tough for them to get any sort of momentum. But in saying that, I thought it was possible for it to maybe pop down to say 14.26 and then get back up. So get a small win of it. It's certainly a trade that when I'm in it, I'll straight away going to cautious exit strategies. So as far as exits, I'm going exit style number one, where I get some of the contracts out at 5 ticks and then just get the rest out as soon as it goes 8 or 10 ticks, and just get that bit of profit and reduce my risk and get to a break-even stage as soon as possible. But from a systematic point of view, like I said, sort of right at the top when I was explaining the system, it's, you know, the setup presented itself at this point here. If all I had was this market sort of forming a bit of a reversal pattern and was coming down here and the other markets weren't playing ball, so normally if this isn't going to get a bit of a push down, you'll see the Russell or something like that sticking quite high, and then I've got a reason to leave it because it doesn't tick all the boxes. The thing about this one here, you know, the reversal pattern was coming, so it's popped down, it's come back, it's contained, so it hasn't made a higher high, it's coming down, it's breaking this sort of significant swing low point here. But all the markets, and especially the Russell, they were well and truly down. They were really trying to push down and certainly trying to get some momentum. So it had a good chance of just popping down, you know, anywhere from 5 to 10, 15 ticks. Even though it's sort of this type of market where it's not likely to push down for long, but you know, it had chances. But at the end of the day, you know, it's a setup, and I was more than happy to take it because, you know, it's based on, you know, a lot of work, a lot of research on my behalf, and it ticked all the boxes. So you know, it's more important for me to keep on going with it, and, you know, I guess there's an opportunity here to sort of step in and say, from a discretional point of view, it's not one to take. But for me, it was, you know, of course, if it's a big risk, then I would step in and do that. But for me, you know, the risk is not there. Even if it's a full stop out, which it was, not particularly phased. No, that can easily make it back. You know, because all the winners are at least twice as big as the losers. So it's from a risk to a reward ratio, it's certainly worth it. So, you know, as long as it's always the reward is there compared to risk, go ahead and do it. So that's wrap up for Thursday. Back Friday.